of the day with a Fireside Keynote chat. I'd like to introduce Lisa Hook, a very accomplished financial professional, I would say rock star, and former president, CEO, and board member at Newstar, a publicly traded company on the New York Stock Exchange, who currently serves on the board at Fidelity National Information Services, a global leader in payment and banking solutions, also a publicly traded company, who will lead a discussion this morning with keynote speaker. At this point, I'd like to hand things over to you, Lisa. Please take it from here.
Thanks so much, and thanks for the fantastic and overblown introduction, I may say. I'm here today with Tom Pageler, who is the president and CEO of Prime Trust, one of the key players in the new financial services world. Tom and I go way back. I ran a company called Newstar in the United States, which provided real-time identity services to, among others, financial institutions, insurance companies, et cetera, for purposes of determining risk, fraud, AML, et cetera. We had the on-time delivery of identity for every adult in the United States and many people in Canada. And as you might imagine, that entailed having a fairly broad range of confidential and personally identifiable information, which until Tom arrived on the scene was, I will tell you now that we're no longer public, completely unsecured. Tom came in as the company's first CISO. Frankly, in the first week, I think he ate 3, maybe 4 bottles of Tums when looking at our cybersecurity and info security infrastructure, which was, as I said, non-existent, and did us the great favor of building very, very quickly a market-leading InfoSec environment before going on to run Prime Trust. I have no business being your moderator on this fireside chat, other than that I will tell you that I owe Tom my life and the company's shareholder value, and so I show up whenever he asks me to ask him random, really, really easy questions to answer. So that's how I'm here today. Tom, I'm going to let you expand a little bit on your background before we go into the questions.
Great. Thanks, Lisa. It's great to be working with you again. Really appreciate that intro. As Lisa said, my background, I came up on the risk and security side, starting as an agent with the Secret Service, and then working at Visa, JP Morgan Chase, DocuSign, and Newstar, and currently now at Prime Trust in the operations and obviously running the company side. So definitely enjoying that. What's nice about this talk today is, Lisa is in the current financial institution environment at FIS. And a lot of the stuff that I talk about today, Newstar is actually the backbone of it. Any of the anti-money laundering, Bank Secrecy Act, Bank Secrecy Act, Know Your Customer type data, and the automated checks, a lot of them come from Newstar. So Lisa's being really humble. I appreciate her coming here, but she's the perfect speaker for this because of her background in financial and in the privacy and AML. And also, as she said, coming to Newstar, there was a lot to do, and she absolutely 100% supported it, got things moving, and she's the kind of leader who really does embrace change. And what we're talking about today is a lot of that. And how do you, the current infrastructure, financial institutions, go into this crypto world and digital assets?
Thanks, Tom. Why don't you tell us a little bit about what Prime Trust does before I jump in?
Sure. Prime Trust is no worries. So Prime Trust is an online trust. We do traditional trust activities such as escrow services and different type of Reg A, Reg D filings, but we also do payments. A lot of the payments are focused on crypto assets. We are kind of the infrastructure for many exchanges, notable like OKCoin, Binance, America. So some of the bigger exchanges out there. And what we do is we allow people to transact into those, so they are able to take traditional fiat and go and purchase digital assets.
Thank you. So I am really excited about this talk and sort of where we are in the market with the new entrants into traditional banking, specifically cloud-based banking entrants, new entrants into the currency markets, and new entrants into the payments market. So where, 3-4 years ago, boards would sit around and talk about traditional players in banking, in fiat currency, in payments today. The conversation has expanded to Amazon, to Google, to WePay, to Alipay. It's no longer respecting any type of national borders or, in many cases, governmental controls, as you all know. So I think this is it's an exciting time to be talking about all these issues. So first, Tom, how do you think digital assets are or will enhance traditional banking, or is traditional banking just going to be left in the dust?
I think that traditional banking will be enhanced through the digital assets. I mean, mostly the area that we can see is the transaction cost reduction, especially when it comes to moving money across jurisdictions. So, really, what's amazing today with a digital asset, you could transfer $1 billion if you wanted to from Slovenia to like Ottawa instantly. It would be on a very transparent, publicly available, viewable ledger, and it will allow for that transaction to occur instantly. And in the traditional payment space, there's a lot of friction that is still in place. You have to choose which network to go on. Maybe it's a wire, maybe you're going to do some kind of ACH, or you're going to do it in batches, or you're going to limit it. And I think that what's really amazing about the digital assets and what's happening is it's allowing for traditional payments and traditional financial institutions to use the current infrastructure, but get some of the friction that used to exist to move on the new infrastructure and enhance it and make things go faster and more transparent. So I think the big areas that financial institutions are embracing with digital assets is the speed, the cost, the ability to go across jurisdictions, and then the transparency. Like I said, it's a public ledger that everyone can see.
So I think that's great in terms of transaction cost reduction from a client point of view, but there's a fair amount of margin there that traditional banks are going to lose, and you don't think that that will affect the health of their balance sheets?
I think that if they do it properly and they're owning it, they can actually increase their balance sheets because let's say you want to move some funds. It doesn't necessarily have to be a digital asset that I would buy myself. So let's say that I want to move $1 billion in fiat. If I'm a traditional bank, what I could do is move that into some type of digital asset, transfer that across, and then reconvert it back out to fiat. So maybe it was something that would have traditionally cost me $25 or something like that in overhead. I can now do that for the cost of writing to the blockchain, which on like $1 billion, I think is like $3 is what it would cost, and with gas and everything today. So I think some of the margins will actually be better for them, especially if you look at like global remittance or anything like that. So if you're a Western Union, you want to move money, there's a lot of fees. You got to get it out there. And if you can do it cheaper on an infrastructure that you replace with a public ledger, you can have a higher margin. So let's just say currently I'm a maid working in from the Philippines, working in like Hong Kong, and I'm saying $200 a week home, and I'm spending, let's say, $15 every time I do that for traditional wires, all this. If it moved into a digital asset, which I wouldn't understand as the maid, all I know is that I walk into a financial institution, they say, hey, we can actually do this for $7 instead of the $15 you're paying. I'll go to you. But what's funny is it used to be maybe $10 of the $15 was actually overhead for the bank. They're making $5 per transaction. Instead, it's 48 cents. So they charge $7. I'm like, wow, it's half the cost it used to be. And the bank's actually making $6.50 instead of the $5 they were on the traditional infrastructure. So I think that's why we're starting to see a lot more adoption too, and some of this conversion, because to your point, yes, there's still going to be handoffs happening, but when you can do the handoff cheaper with less infrastructure and a ledger that everyone can see, decentralized, and do these things at a cheaper cost of the overhead, you actually can increase your margins.
So talk a little bit more. Thank you. Talk a little bit more about adoption. How do you see adoption going? What are the barriers to adoption beyond knowledge, frankly?
I think that the adoption's actually going extremely well. It's kind of surprising to me. It's going faster than I probably would have anticipated. And I think there's a few factors there. One, I'll use like a private example. So I mentioned that here at Prime Trust, we use FIS as our processor. And what's interesting about that, thank you. So it's awesome because basically what's happening right now is we're viewing it all as fiat with FIS, because basically we're just using traditional fiat rails, but then we convert it into the digital asset and then back out. So what's happening right now is FIS is getting involved in it because this is a way for them to support some of these exchanges coming on, but they can take a view of it being fiat because people are paying. Let's say I use my debit card, I go to a big crypto exchange, and I then use my dollars to go buy some Bitcoin. What would happen is I would go to that exchange, and on the back end, it would use Prime Trust to then take that payment, go through FIS with traditional fiat. Everything is fiat coming in as US dollars or the local currency. And then basically it would then go into the trust account, and then it would go and purchase the crypto asset. And then that would be securely stored within the trust here at Prime Trust. And then the person walks away with crypto. And what's happening then is it's opening new markets for traditional payments. It's allowing people to get into this space and then ultimately use fiat into a digital asset. And now I'm talking like on a consumer side, if you start doing that with larger scale companies that might want large amounts of Bitcoin or something to transfer funds across, as I explained earlier, to get cheaper rails, now you start to see an expansion where FIS, which was a traditional only fiat type payment system worried about cards, can now go in and start getting involved in digital assets and has much more potential and growth. And it works very harmoniously with us as we all grow and go to that market. I think the other area too that's showing the adoption is governments. I'll use like China as an example. They've announced that they want to digitize the yuan. So what we'll see is at some point, we're talking about fiat right now and then going into a digital asset. Fiat will be a digital asset itself, which will then speed up things even more because you can take your digital yuan and then convert that into whatever you want. It will still go through the traditional system though. Like FIS will accept that as a traditional fiat. So we're putting kind of the rails in place, which will just get quicker and quicker as that happens. Obviously, the U.S. has announced that they're going to look at digitizing the U.S. dollar as well. So I think we'll start to see governments doing that. And then also, just on another note, is like OCC in the U.S. just announced that traditional financial institutions can now start to get into digital assets. Do I think they're going to come into it? No, I think they're going to continue to do what they're doing. But what it's doing is allowing them to say, okay, now I can go try some other things here. I don't have to worry about just fiat to digital asset. I can actually maybe buy some digital assets. Maybe I can mint a coin myself. I can try different things and start to get in that space. So I think we're seeing adoption go faster than I thought it would, mostly from the traditional institutions like FIS jumping in and doing it, and then government starting to say, okay, let's support this.
So can you, in that regard, as governments are beginning to support it, and with China's announcement, what are the risks in the digital environment from countries, particularly like North Korea, which is a well-known nation-state bad actor in the financial services environment? Do you see digital as being dramatically more risky, and what actions are governments and companies taking to prevent theft?
I think that's, back to our News Star days, that is where like the travel rule comes in place. So the travel rule basically says when this stuff travels through the system, you need to know who the person is on each end. So the idea would be North Korea or somebody who's on like the naughty list would not be able to go in there, because basically if Lisa and I are exchanging data with each other, everything I described, you would still do the anti-money laundering, the know your customer, the KYC, the Bank Secrecy Act, all that stuff, and we would onboard properly. So as Lisa signs up, let's say with in a large exchange, they would collect the data from her, make sure that yes, Lisa is a legitimate individual, not out of North Korea, and she is going to then transact with Tom here, and I will do the same on my end. And what we're finding is what's nice about fiat to digital assets, we're able to kind of use the traditional system. So if you're using your debit card or credit card to go then begin the transaction, we know the AML KYC has been done on that side because that's traditional banking. But then some people come in, they might want to fund an account and they have cash in there and they'll move it. We just have to do the same on that end. And that's where like things like Newstar come in, because they have all the data that you described before, and they can automate a lot of this. So as someone signs up online, they can look and say, okay, the device they're coming from is coming from an area that is on the good list. Tom says he is Tom. He uploaded a photo. We automatically looked at it. It looks right. This is a legitimate passport. He did answer the out of wallet questions that come from Newstar, different things like that, and we can really track IDs and everything. Now, if someone tries to take over my account and come in, those things also come into play, because now you've got the traditional anti-fraud and know your customer data in there. So if somebody starts coming in and saying, "Hey, I'm Tom," but the IP address for somebody's coming from North Korea, or it's bouncing through a node that's known to be outside of where I'm saying I'm at, then these things start to fail. So very similar to the traditional payment system, just going a bit faster because everything is online, whereas traditional payments, you have online and in person, so you can bring people to the branch. So it's just that whole transition to the online. But again, I think going from the traditional into the digital asset is helping bridge that, because we're not making it up from scratch. We're using the current infrastructure.
So how do global rules around data privacy, GDPR, some of the rules that are coming out of Asia, with respect to the right to be forgotten, which from my point of view is fantastic as a criminal or aspiring criminal, how did those rules impact your ability to understand good versus bad actors, and particularly frankly where countries and criminal organizations tend to use proxies who look like good actors? So that's actually two questions. One is, how do these data privacy rules impact your ability to comply with regular banking protocols, et cetera? And how do you do the upstream kind of to ensure that behind what looks like a legitimate actor is not a bad actor?
I think, again, the best way to do it is not to think of a digital asset as something different. Just treat it like you would any asset. And if we can take that approach and apply the rules that are currently for any kind of financial institution. So anybody who's coming in, we just need to know who you are. We need to kind of know your history and understand where your data is going. So that gets us a good idea of who the person is. Any rules like GDPR or anything like that, just make sure you apply them the same way. So yes, you have a right to be forgotten, but there's also rules in there. If there's a business need to keep the data, we keep the data. It's the same with banking and stuff. So yes, I want to be forgotten, but we might have to keep the data because we are required to keep it for maybe 7 years due to settlement of the account, stuff like that. So as long as we're following the same rules, I think that everything works really well, because you're not reinventing the wheel. You're just saying, okay, here's a new technology coming in that's speeding things up, reducing friction, allowing people to probably charge less to their customers while making a bigger margin. Let's just make sure that we keep this thing going right by following the rules, so we don't break it for all of ourselves by not doing that properly. Now, with all that data, you just apply it the same way you would any other fraud scoring at a bank, right? So you would start to collect all that data and make sure that you understand your customers. Again, the KYC, know your customer. Look for things that are out of pattern, have those things come up. Now, obviously, we're talking everything being online, so that makes it good and bad. The good part is it's kind of one vertical, all online, so we know we should look at that pattern. You don't have to worry about, are they going to go into branch? It's something that's a little bit different. But you also lose that ability to have them go into a branch and actually open accounts and see them face to face. So I think it's a double-edged sword. But with COVID, everything happening anyway, most people are remote anyway. We're not going into stores. So I think that's also kind of helped drive the ability to do this, because this is the world we live in right now. I mean, Lisa, you and I are doing this fireside chat. You're in California. I'm in Las Vegas right now. We're not near each other. A year ago, you and I would be sitting up in Canada together on a couch doing this discussion, right? So I think that the world's changed anyway that direction. So that's helping us expedite and actually make this go quicker and get embraced by a lot of people.
So I was going to ask you next, do expand on the impact of COVID. Has it simply accelerated the migration to digital, or are there radical and unexpected changes as a result of COVID? And if so, do you think that those will remain, or is this kind of a temporary world that we're living in and we might get back to what we used to consider as normal?
I think it's accelerated everything that's online. I don't think we're ever going to go back to normal. I think what it's done, and that's, I'll mention other industries too, right? So I used to work at DocuSign, DocuSign's exploded. They now do electronic notary, so they can actually get on and you can notarize from your house, right? That didn't exist before COVID. It was something DocuSign tried to do. They could do it in one state. Now they can do it in every state, right? So that is something that you're not going to just take away once COVID goes away, because people are going to be like, this is very convenient. I don't have to run home now and go meet the notary. I can do this online. We all dial in and we do this thing. So that'll stay. Same with like telehealth. I mean, doctors always wanted patients coming in, but now they're realizing we can't, and you're seeing enhancements there. And now it's like, hey, it's a lot easier to just get on a telehealth, take a picture of whatever's ailing you, or maybe you can even get you have the symptoms, they look at it, they go, yep, you need a penicillin for that, or like, oh, that rash on your arm will clear up. You don't have to come in. I think we're going to see those things stay. And then I'm seeing the same thing in the traditional financial market. There's a lot of people home. Companies that are doing online transactions are getting a lot more growth. Our growth has been very significant month over month. I think it's because a lot of people are remote. I think people are actually starting to self-manage some of their investments more just because they have the time. I mean, you're not going out as much, you don't have the commute. And I think that people are becoming more, they want to own more of their control of their assets. I think it used to be you worked, you did your commute, you got home, last thing you want to do is go check online and check your accounts. So you're okay with like financial advisors, managing your funds for you, or you have it in a 401k or some kind of IRA account, something like that. I think what we're seeing more and more are people like, hey, I want to learn more about these digital assets. I want to invest in them. Or, hey, I want to invest in some of these like online companies like, the Zoom or DocuSign or any of the ones that are starting to go online. I think we're seeing more and more of that. And I don't think that'll go away, because you're not going to say suddenly, okay, now I want to go back to the office every day, 9 to 5. I want to go and do the daily grind drive. I think we'll see some kind of hybrid where people are going to want to go sometime in the office and want to do things, but they're going to want that time at home where they can get more done. And digital assets are 24/7. Their markets don't close. And I think that's pushing people towards those markets, because you have more time at home, and without the commute at 5 in the afternoon, the traditional markets are closed, but these digital assets are still going. So I think we're seeing more and more people trying to do that, and it might really push us towards a more global, always open market. And I think that what will happen ultimately will be a decentralized 24/7 market that will emerge, that it will be the norm.
That's really interesting. And so actually, in that regard, what do you think happens with old-fashioned cash? There's a massive coin shortage in the United States because nobody's using cash, right? Do you see over time the distribution and use of paper and coins as going away, and literally that all shifting to a digital environment? Or do you think at some point my bank can stop sending me emails begging me to bring my quarters in?
I think we'll see cash go away. It'll take some time. And the reason why is to your point, the coins right now, you can't get them. So people are used to going to restaurants, or, you go to a drive-through, you have to use your credit card right now. They're not taking cash because they can't give you change, or you have to have exact change. And so if there's a coin shortage, people can't get the coins. So people are starting to accept that cash is not as accepted as the digital assets, credit cards and stuff. So that's a big shift. It used to always be cash was king. No matter what happens, you have cash. I think there's another interesting thing is the statistic. I'm going to get close to that because I don't know exactly the number, but it's about $500 billion a year that the U.S. government alone pays to move cash around, and that's coins going. That's printing cash. That's moving from the Federal Reserve Bank to the banks. So think about that. That's a lot of money. And it costs a lot of money to move money. And if you can go to a digital asset that is like a U.S., stabilized U.S. digital dollar, or stabilized yuan, or a stabilized sterling, these kind of things, it's much easier. So now you can suddenly start to transfer things around. And then if you think about it, if it becomes where I have a virtual dollars on my phone or something like that, there's an infrastructure there. I don't have to worry about coins anymore. I don't have to worry about transferring coins, because you can go beyond 2 decimal points now. You can go into infinite decimal points, because I can literally issue percentages of this asset. So now when I walk into the restaurant or whatever, they don't have exact change. It doesn't matter. I pay through some type of mobile app or digital wallet that is a fiat, because it's government, it's just a digital fiat. And I also think that we'll see a lot of, there's going to be infrastructure. Well, what if we have outages and stuff? There's going to be multiple nodes set up. There's going to be different ways to connect. There'll probably be a certain amount that's allowed to offline settle and batch and things like that. So I'm not saying it's going to take some time to iterate on and figure it out, but I think we're going to see really good follow-up. I mean, it's as bad as COVID's been for everybody, and it's horrific, and it sucks what's happening. It is interesting because it's something that's allowing us to look at it saying, how can we change the world where we can be able to work from anywhere in the world? Honestly, I think a lot of people don't want to go drive their cars every day anymore. We're seeing that the oceans are cleaner, these kind of things. These are these there's areas that people just don't want to go back to. I love the idea that Venice is actually kind of clean now. I mean, I don't want to be on adding to all that. So I think that this is the stuff that's here to stay, and the next generation's embracing quickly. And it kind of just is pushing the older, maybe resistant generation to adopt it as well. So I think it's here to stay.
Well, to your point, while COVID is horrific, there are so many really exciting things going on in your world that I'm eager to see. But I need to run off to the bank now and get rid of all of my paper, cash, and coins, because I'm stuck with a ton of pre-EU currency. If anyone on this video needs lira, I think I have hundreds of dollars left with them. Tom, thank you so much. I do want to make one last point here for the folks watching from Canada. You may notice that for some unknown reason, Tom has a picture of Bill Murray in the background. Tom was really trying to reach out and be Canada positive. Bill is a hero in Canada and actually has the Bill Murray Day on September 5th in Canada because he's filmed almost all of his movies there. However, sadly, Tom, he's American, so you really screwed up on your Canadian outreach. That having been said, thank you all so much for joining us. We really appreciated it. And I learned a huge amount from Tom this morning. I hope you all did as well. Thank you.
Thank you, Lisa.